On today's show, we'll discuss the signing of the Africa Growth Opportunity Act and the MCA Modernization Act by U.S. President Donald Trump. And later on the show, we'll discuss how China and the United States are engaging Africa. As always, you can join the conversation with the hashtag #BeyondMarket, and you can follow my Twitter handle too at Esther Ubudaga. Now, as the push for U.S.-Africa economic and trade relations continue, the Trump administration looks to expand economic growth in Africa with a market-based approach. And following the recent signing of the AGOA and MCA Modernization Act by President Trump, the plan is to help Africa integrate into the global economy. So we ask, with the signing of the AGOA and MCA Modernization Act, what is the future of the AGOA and its associated benefits for the continent? Jonathan Nash, acting CEO of Milliennium Challenge Corporation, joins me now for this discussion.
So this act that just passed gives MCC the ability to take a tested model that we've worked on a bilateral basis, and now we can work on a regional basis and work with multiple countries at a time on projects that will promote regional trade and investment.
Let's take a few steps backward and talk about what the MCC has achieved so far. I mean, I know that you've been working towards ensuring better trade and regional integration, and the overall picture here is to help the countries that you work with in sub-Saharan Africa to be more economically independent and just reduce poverty and create jobs. Tell us some of the strides that you've made in that regard, some of your achievements.
Great, thanks, Esther. So the Milliennium Challenge Corporation is an innovative U.S. foreign assistance agency with a single focus, and that is to promote private sector-led investment to reduce poverty around the world. To date, we've partnered with 22 countries in Africa and have invested over $8 billion in grant financing for various projects that we believe have driven economic growth, opened up new markets for American businesses as well as African businesses.
Do you have, can you give us an insight into some countries that you could say are very good examples in terms of how MCC has been successful in this regard?
Great. Well, we've worked with a number of countries. One instance I'll give you is Ghana. Right now, we're working with the government of Ghana to reform and overhaul its energy sector. The government of Ghana is currently selecting a private sector operator to come in and help reform the utility and to make additional investments, which we believe will catalyze additional private sector investment in independent power production in that country. So our $500 million grant is leveraging another $500 million in an investment in the utility, as well as $3 billion worth of commitments to invest in the energy sector.
I'm interested in this statement that you made when this act was signed. You've said that the MCC's innovative and tested model has already incentivized countries to improve governance and rule of law. Now, this is away from the economic aspect of things now. Could you give us an example, one or two examples of countries where you've seen this work?
That's right. So MCC selects partner countries based on their performance against a set of 20 indicators that largely measure the extent to which a government is ruling justly, promoting economic freedoms, and investing in their people. And I'll give you a great example. In Cote d'Ivoire, just last year, I signed a compact with President Ouattara for an over $500 million program. And Cote d'Ivoire had been working for a number of years to qualify for MCC assistance. So President Ouattara told me that he used our scorecard as a roadmap for reform in his country. And so by taking on or making different policy and institutional reforms and reducing the time and costs associated, for example, with starting a new business, their performance on our scorecard improved greatly, which then led them to the opportunity to receive this large-scale grant. And we've seen that in a number of countries where countries are undertaking these kinds of reforms because they know it's good for business, they know it's good for growth, and at the same time they're working towards qualifying for a large-scale grant from MCC.
For those countries who are struggling, they've qualified, but they're still struggling on maybe one or two indicators, like you mentioned earlier, tell us how those countries are working through those challenges.
So we also have, in addition to our large-scale grants, which we call compacts, we also have a program we call the Threshold Program. And this is a program for countries that are right on the cusp of being able to qualify for the large-scale assistance. So, for example, our board of directors just last month approved a Threshold Program for Togo. And this is a smaller scale $30 million program that will go to support the government's efforts to open up the information communication technology space, as well as work on reforming the process for establishing land rights. So countries that are right on the cusp of qualifying for large-scale assistance can also work with MCC if they have demonstrated they're committed to good governance, fighting corruption, and promoting economic freedoms.
Is it just those three? Because I was going to ask you exactly what it takes. What is the list that there's a country that is wants to be part of the MCC list? What does that country need to do to qualify?
So there are 20 third-party indicators, and you can learn more about the scorecard and our indicators on our website, mcc.gov. And again, we take a look at rule of law, the extent to which a country is promoting or investing in their people in terms of education, immunization rates, the extent to which they're promoting business-friendly policies, and controlling corruption. So there's a lot of detail on our website about these indicators, and again, these indicators are managed by third parties. And every year we take a look at all the low and lower middle income countries as defined by the World Bank. We look at performance against this scorecard, and our board of directors, who's chaired by the Secretary of State, uses that to make decisions about who's eligible for MCC assistance.
Okay, let's talk about AGOA real quick. And I know that it helps eligible countries in sub-Saharan Africa to diversify their exports to the U.S. And I know I've seen some of the numbers. Total AGOA, for instance, total AGOA exports to the U.S. in 2015 alone was put at $9.3 billion US, and you're expecting this number to grow. Tell us about these exports and tell us about these exports and in what ways that these exports are changing the economies of these countries.
Right, I think through programs like AGOA and programs like MCC, and in particular this new regional authority that we've just received, the idea is really it's not about aid, it's about trade. And it's really, we see, as you and your viewers know, a number of the world's fastest growing economies are located on the continent. 1/4 of all the world's consumers will be based in Africa by 2030. So we see real opportunity to deepen our trade relationship, open up markets both for African businesses and American businesses, and really increase that trade. And it's that kind of engagement and partnering that we believe is what will really lead to long-term sustainable growth. And that's got to be private sector-led growth.
Now, this is happening at a time when African countries themselves are looking inwards and now talking about better integration on the continent. I'm sure you've heard of the African Continental Free Trade Agreement, looking to tap into Africa's huge population, and of course, with the end game of creating more jobs and just making all the countries more economically prosperous. What are your thoughts on how Africa is proceeding with this, and how it could perhaps complement what you're doing with African countries?
Absolutely. We have been committed since the very beginning, when we were founded 14 years ago, to really helping our countries get on a path towards self-sufficiency. So this new trade agreement that was announced coming out of the African Union Summit really aligns with what MCC has been and will continue to do, and that is to make investments that will really catalyze growth, economic growth. And so for us in particular, this regional authority is going to allow us to make investments across borders and really help reduce the time and costs associated with moving goods and people across borders. So we believe that this authority will really give us additional flexibility and opportunities to support what we are hearing from a number of our African partners about their desires to integrate their economies on a more regional basis. So whether that is helping with cross-border transportation and logistics infrastructure, helping with cross-border power sharing agreements such as the West African Power Pool, or other types of infrastructure that will support that regional integration. We believe that we stand ready to work with our African partners in that regard.
What major investments would be top on your radar now that you have more flexibility to do more?
Well, part of this is MCC implements its programs in partnership with our countries. In fact, we rely on country ownership and implementation as our model. So the first thing that we're going to do is sit down with our country partners and identify what are those real constraints out there to integrating their economies with those of their neighbors. And so jointly with our African partners, we will start to select projects that are poised for really driving growth. So one example may be that we work with 2 countries or more that share a border, and we work to upgrade and enhance transportation and logistics infrastructure, and then help modernize border crossings. we hear from the private sector all the time, and I'm sure many of your viewers have experienced this firsthand. Oftentimes, border crossings lead to increased cost, and the delays associated with inefficient border crossings really drive up cost and act as a disincentive for businesses to expand and invest across borders. So we can come in and work with our partner countries to help modernize those border crossings, dropping the cost and time associated with moving goods and services, goods and people across borders.
It's interesting that you mentioned it, because these are some issues that African countries have been struggling with for decades. You've talked about logistics, the border, non-tariff barriers, etc. These are major issues, and sometimes they even get political, and one just wonders when it's going to change. But I'm interested in knowing how much is being committed to all of this. If you're going to be working with these partners, how much is going to be put on the table?
Well, through our programs, we have seen our partner countries undertake tremendously challenging political and economic reforms in order to access the grant financing and put these sectors and these economies on a path towards growth. So we're only going to select projects and work with partner countries that demonstrate a political commitment to making this cross-border investment successful. And so we've got a track record of working with our partner countries to implement complex, large-scale projects, oftentimes infrastructure, on budget, on time. Our grants are time limited, so that really gets our country partners focused on implementation. So we're not going to work on projects or select sectors where we don't feel our country partners are committed to working with each other to make the project successful.
Would you be willing to talk about one or two of those countries that are top on the list who have demonstrated a real commitment to making those changes?
Sure. I think we're heavily invested in the energy sector in a number of countries. And I mentioned Ghana earlier, they're undertaking some significant reforms, both in terms of tariffs, improving the regulatory regime, ensuring that independent power producers are paid. We've seen that also in Zambia in the water sector, in our investments in Lusaka. We've seen that in Malawi as well. The government has undertaken real steps to reform the energy sector and help stabilize the utility there. We see that in our recent investment in Niger, where the government has undertaken a commitment to liberalize the fertilizer sector. We're making a big investment in agriculture productivity in Niger along the Niger River, as well as helping them to improve and build out some farm and market roads.
I've been speaking to Jonathan Nash, Acting CEO, Milliennium Challenge Corporation.